It's Thursday, 24th of April. Very good morning to you. How are we doing?
I'm really happy to be here, Rich. Comeback of the Scottish duo. I even went to bed extra early yesterday because I couldn't wait for today.
Well, like Christmas.
Yeah, exactly.
It's like,
couldn't wait
Santa's
to
coming
be
in the
back
morning.
here with you, mate.
Oh boy. Right, good morning to you. So, we are live from Cannon Street, where we've had a couple of power outages this morning in the studio. So if the lights go black, don't worry, it's not an earthquake like our poor on-air colleague had to go through yesterday. Did you see that?
What, in Istanbul?
Yeah. My goodness. Meltem Bozbioglu.
Oh, brilliant pronunciation, mate. Hit that spot on.
Live teşekkür ederim. Was live. Don't say that's not a good one.
What?
Was live on CNN as a 6.2 earthquake hit Turkey, hit Istanbul. And bless her, her hands are shaking, and she keeps it completely professional, apart from asking the producer to phone her mum and check her mum's okay. She even goes on to WhatsApp like this. You can see it. She's still reporting, and she's texting her mum on WhatsApp. Like, fair play.
I'm sure you would have done the same for Mama McDonald.
Well, Mama McDonald's out there watching the show anyway, so she'd know to text me.
No, she's a better mother because she's already watching. She knows.
Exactly.
Exactly.
So anyway, if the lights go out, we think that we'll still be streaming, but if the lights go out, we might go a bit dark, which is a better way to watch Ronnie anyway, to be honest.
Oh, so blimey! Start off with a bang.
We'll move to a podcast, yeah, we'll try and keep it going. Try to keep professional Ronnie.
Yes.
As professional as Chris Beecham.
Oh yes, the historian. But before we dive into all of this, I just want to say a special good morning to my mate, Parky 1977, from Aberdeen. Up the Dean.
Of course, Parky's from up in Aberdeen, isn't he?
Up the Dean, mate.
All right. Well, good morning, Maturin from Valencia.
Yeah, good morning to everyone, but especially good morning.
Sheffield.
Good morning to everyone, but especially good morning up in Aberdeen.
Andrew McKelvey spotted Beachy. That's why I've been saying that Chris Beecham, absolute soldier. So he was on BBC this morning at 5:30 a.m. Andrew McKelvey, tell us why do you know that? How were you watching BBC at 5:30, sir?
Me?
No.
No.
Andrew must have been.
I was at the gym then.
But there is our beautiful clock. No, why do they think you don't go to the gym?
I'll show them the proof afterwards.
But it's not there, is it?
Oh, mate.
What are you going to show them? A pair of sweaty shorts?
Somebody give this guy a podcast, bro.
So you got the clock. The date was up there as well, 24th of April. So yeah, we're back. But yeah, Jesse's worried that it's the new clock draining too much power from the system. That's why we're gonna blank out.
Well, beggars can't be choosers, mate. Either you get the clock or you get the lights.
Yeah, either or. Right, so Ronnie, as we know, has been at the gym this morning. He's trying to work off those calories from all that ice cream that he loves. Unilever numbers this morning, sir.
Actually, I do love ice cream, and I do love Ben & Jerry, which is a Unilever product.
So we've got numbers reported this morning at 7 a.m. We'll go through those.
Yes.
The ice cream sell-off is on track. That's good news for Q4.
Is it on track? I thought it was paused for a while, but now it's back.
For Q4.
So they're selling it, and they're not IPOing it or anything like that.
Well, we'll go through all that after we see what's coming up on today's show. So coming up, we've got myself and Ronnie's through till 8:12 a.m. 8:20. Ronnie has a busy morning. We're going to lose him at 8:12. But Axel Rudolph is coming in. Talk about like an upgrade there. That is impressive. So,
something wrong with my mic here.
we keep on getting better and better as the morning goes on. Then Angeline and Jack Maguire live from the trade desk 8:35. We've got Martin Harris coming in to do an all sessions open bell.
It was actually his birthday last week or this weekend.
Oh, that's good knowledge.
Yeah, I'm taking him out for lunch today.
Are you?
Yeah. Cheeky Mackies.
Wait. So 9:20. We'll come back to that in a second. 9:20 a.m. We're doing the live Q&A is back. It worked so well a couple of Fridays ago. We're doing so. Get your questions in, and producer Phil is going to be live on air. That's when we'll black out. We'll black out when producer Phil comes on. And then at 9:40, who have we got?
We got my fellow Swede, Patrik Tomenius, with Angeline Ong.
Right, so, okay, let's go to overnight action and let's hear more about your lunch plans.
Yeah, I was planning on going through the Unilever results, but we can talk about my lunch plans as well if you want that.
Should we do that in overnight action, or do you want to keep talking?
Let's talk about what the people are here for, right? Unilever results, mate.
Well, so when we say overnight action, they hit a button in there, and then it goes to overnight action. Then you talk about what happened.
Okay, hit the button, lads. Hit the button. Sorry, it's my first time here.
Welcome to Overnight Action, the part of the show where we talk about what's happened overnight and the action.
Oh, what? I had no idea.
Are there any sets of numbers out, right?
Yeah, so what's happened overnight? Rich, do you want to walk us through it?
I think we had numbers from Unilever.
You're actually right.
What were they like?
Funnily enough, I have them up on my screen here. First quarter underlying sales, beat estimates, up. Pricing, up 1.7%, showing good pricing power. UK revenue is 14.83 billion, even though estimates was 15 billion. What else do we have? But underlying sales beat with 3%, estimated 2.84.
I think that's an inline. 3% versus 2.84.
It's still better, mate. 3 is more than 2.84.
Yeah. Rounding error.
Ice cream separation on track.
Yeah.
And don't get too excited now, but they have an ongoing 1.5 billion euro share buyback to be completed in first half of the year.
Nice.
Impact on tariffs of profitability as limited.
Well, and this was the key line, right? Everything now, you're seeing 44% of companies reporting mention the word recession in their conference call so far. That's up from 4% in Q4. But the line from Unilever was the direct impact is expected to be limited and manageable. So, a bit of a relief there.
Also, I think that Unilever is a defensive stock that is performing well in times where consumers have less disposable income, because you still need to buy your Lynx Africa as you do.
And some would say you sweat more in these kind of market volatility.
Exactly. Even better. Think outside of the box, Rich. Some people think outside of it. I live outside of it.
You live in it, mate. Eating too much of it, that's the problem.
This guy is on fire today, man.
Your lunchbox, I've seen it out there.
My lunchboxes are well balanced and good macros on it. Home care has been doing well. Sorry, guys, I'm trying to keep this guy on track here.
Now, talking about Ronnie's sweaty gym kit, Adidas have had numbers this morning and they've smashed it out of the park.
They have indeed.
13% increase in sales and 82% increase in profits. So the three stripes really doing well. They're taking market share in America with those beautiful Sambas and the Gazelles.
Yeah. It's very interesting to see when they're almost doubling their operating profit. It shows good management of the company, and they're really done well in sort of, capitalizing on these trends, these fashion trends that's been coming with Sambas and Gazelles. And
what's next? I do worry a little bit. Let's have a look at the Adidas
and the question is as well, how will this affect Nike or Nike, as we say in Liverpool?
Hey, there you go. So you see, look, there was a big sell-off, obviously, on China, on the tariffs, and you can see we dropped from 220 down to 180. You could have picked these up at, absolute bargain there. But we have seen a rally back up to around the 210, 211, waiting to see how much higher they look in pre-market shortly. But indications so far are that it certainly is a move up for Adidas.
Are you in Adidas?
As in the stock,
Yeah.
I'm short the 300 calls because when they were up at 250, that was a little bit too much.
I mean, that's fair, yeah.
But it goes back to Andrew McKelvey's point yesterday. Why aren't we buying JD Sports, right? If Adidas are continually knocking out the park, I think you get a kind of 6-month time horizon on the Nike Great Revival. Then JD Sports, is it going to be time to buy them into a World Cup year?
Could be, but didn't we say also that the majority of the growth came from the US?
In Adidas, yeah, but JD Sports, 40% of the business is now US.
Oh, really? I didn't know they were available there.
Learn something new every day.
Especially when I'm with you, mate.
Right, so Adidas, we got good ones. However, Ronnie, you haven't been buying your Gucci, have you?
Unfortunately not. But it is
drop.
bonus season coming up, so I might go buy some Gucci flip-flops, a cap.
Yeah, back in Liverpool, maybe.
I mean, that's the official hood uniform of Stockholm, like the Gucci cap. So my dad has banned me from wearing those type of things, which I'm grateful for. But yeah, Kering. I've been quite bearish on Kering for quite some time now. One, they're just not doing as well creatively compared to their peers. Secondly, where are they in the market? Are they trying to be, a high-end luxury brand, or are they trying to sort of capture a wider part of the market? Which one are you? And the luxury space in general has taken quite a big hit. I mean, LVMH is no longer France or Europe's biggest luxury company. Hermes has taken that spot.
Oh, has it really?
Yeah. What did Ronnie do to Rich? I don't know, mate. I really don't know. But I do know that Kering, Mama McDonald will have a talk with him. But I do know that Kering is. I'm not very, bullish on that. If I'm not mistaken, they got a new creative director for Gucci, so there could be a potential turnaround.
Well, but this is the problem. So Demna has been appointed creative director.
Right.
Right. Now he's come from Balenciaga.
But that's also one of their brands.
Exactly. It was an internal hire, and the market was disappointed by that.
Yeah.
He gets his first collection out in September, which means that'll hit the shops in Q4. You've got 6 months before you even get anything into store for this turnaround.
Yeah.
And sales are dropping 24% year on year.
And also Balenciaga's sales weren't doing brilliantly as well already.
No.
I mean, mainly fueled to their controversial advertisement.
But at some point, I haven't seen that advertisement, but I can tell by your face it's not one we want to get into. Look at this fall from grace. It's as far back as I can go. That is 2021 August. That's when you used to have to queue round the block to get into a Gucci store. And the stock has dropped from 800 down to 174. Now, if we start, there'll obviously be a big marketing campaign, right? And September is going to be the first time we see it on the catwalk, if you get the invite.
Must have got lost in the mail last year.
Do we start to see some, with that graph that we saw, that the absolute, that is a real trek down a mountain, isn't it?
Also, yeah, but as you're saying, the first collection isn't coming out until Q4, and then the results are going to be lagging until after that.
Yeah.
And then also we have tariffs trade war between China and the US. China is one of their biggest if not their biggest market. If there's a turnaround, I don't think there'll be any time soon. I don't think we've bottomed on this one. I am very much keeping my bearish point of view on Kering.
But how much worse could it get, right? We've got.
That's a dangerous question to ask, mate.
Yeah. There's somewhere there's value in Gucci as a brand. Let's take a poll, right? No cheating. What is the market cap of Kering now? No cheating, because I would not be able to guess this within 30.
What's the market cap of LVMH? 500 billion?
Well, I was going to say 600, but the stock's come down, so.
Yeah, some in that area, right?
Yeah. This thing's got to be less than 100 billion now, doesn't it?
I would say.
Right. Let's go less than 100 billion. No, less than 50 billion, less than 100 billion, less than 200 billion, or above. That makes sense? Less than 50, less than 100, less than 200, or more.
Where's your answer?
Oh, it's really tricky. Yeah, I'd go 50 to 100.
50 to 100. Yeah, I'm quite comfortable in that 75 billion area.
Mind you, but because remember, this was PPR, right? Pinot Printemps.
Sorry, is that French or?
This was, if you've been doing the job for longer than 6 months, then you remember PPR. And so Kering, you know, the artist formerly known as. So they do have Balenciaga, Botta Venega, Gucci. So Alexander
YSL?
McQueen.
YSL?
YSL.
Yeah.
Nice.
Come on.
So maybe we're underestimating what the actual market cap is.
Yeah, I think.
Right, pulls up. Let's go.
I think the issue here is we often judge them too much based on. I mean, Gucci is the flagship. It is the biggest brand of them.
But it's come from 800, so it's been smashed. This was, I mean, it was never €1 trillion, right? So therefore, it must be 50 to 100.
That's what I put.
If this is 50 to 100 billion, there's at some point there's potential, surely.
I think the potential is for a privatization, that they take it off the market, that they, you know, the
Private equity.
Yeah, maybe the owner, Pinot, he's got a few pennies to spare. He might go partner up.
Oh, hang on. What?
Repeat that, please. 18 billion.
Mate, you've got to wait for the.
Oh.
You can't give the answer.
Did you?
Who asked what has Ronnie done to me?
Sorry.
There's your example.
Sorry, did I say that out loud?
We're halfway through a poll and Ronnie gives out the answer. Look, if this is down as low as 18 billion, then are you still bearish? That's the question.
And the payback was them misspelling my name. Thanks, guys. Appreciate that.
Are you still bearish?
I think we can see a catalyst in a privatization. That's what I believe. I think the Pinot, together with some big PE firm, would take this private, because at some point they got to realize we can't keep taking this beating. We got to sort of take a step back, rebuild, and do that outside of the pressure of quarterly updates.
I was just checking Burberry, right? We know Burberry had this Goliath rally from £6 up to 12, right? So Burberry doubled in the space of 6 months,
And then halved.
and then has half to get, well, not half, not quite, down 80%. But you know, this was the great revival of Burberry, and it's failed. And it's failed because the market's come off and the tariffs and everything. Would you rather own Burberry or Gucci, Kering?
Neither. But if I have to pick, I would probably go for Kering, because I think they have a wider portfolio of brands. But I think neither of them are well positioned to sort of continue or like have some sort of revival. One, due to the macro condition we're in. Two, due to the trends of smarter spending from consumers with less disposable income. So the luxury sector as a whole, I'm quite bearish on it. More focus on sort of defensive.
Right, bearish on the economy.
I'm bearish on everything, mate.
Right. Okay.
Except for you. I'm always bullish for Rich.
And the show.
Always.
We've kept the lights on so far. Touch wood. Right, so that is Unilever, Adidas. That's right, Frosty Burberry rose on takeover talk from.
But that was a fake rumor, wasn't it? That Moncler was going to buy them.
Well, we don't know if it was fake. No smoke without fire. The whole thing goes, right? It certainly never came to anything.
Yeah, but they came out and clearly sort of.
Moncler did. You're right.
Yeah. You're a Moncler guy, aren't you?
Never bought a single thing from Moncler in my life. I have owned Burberry.
Yeah, that I can see.
Quite, yeah. Well, it's British, isn't it? Aston Martin, Burberry, you know?
Personally, more of an H&M guy.
Well, that makes sense.
Exactly.
Back the home team.
Exactly.
Uh,
Don't back the stock, though.
right, so what else have you got for us overnight?
Overnight.
We came off the highs, didn't we?
Yeah.
We were right up there. 54.50 looked a little bit extravagant, let's say, in the S&P 500.
Yes. The miners did quite well yesterday. The miners did quite well. The banks did really well. And then we saw, what else did we see here? Utilities, not too good. Severn Trent and United Utilities, they were down. Some macro figures for you. Keen on that?
What country?
Pick one, mate.
US.
Another one.
UK. If it's not US or UK.
Okay. UK services PMI fell to 48.9 in April. Previous was 52.5.
That's quite a jump.
Yeah, falling below expectations into contraction territory. And UK manufacturing PMI also came in at 44, which is dropped from 44.9. So that's not ideal. But yeah, other than that, maybe you want to contribute something, Rich.
What I would like to take a look at the intraday of the S&P 500, and you saw here we had the original increase up to 5,380, which is where we were chatting yesterday. We did say, look, it could go above 5,400, maybe 5,420. It actually got up to 5,450. My short call position was starting to hurt at this stage. That was the P&L was starting to give me a bit of a slap. And thankfully, Besant came out and went, okay, actually, everybody's getting ahead of themselves here. We haven't got a plan to reduce the tariffs on China. We just say that it might happen. And now the rumor is that he's going to cut them in half. They're only going to be 60% tariffs.
Oh, great. But also, I mean, we're sort of, as Chris said, we're sort of at a figure where, you know, it's so high it doesn't even matter if they go higher. You know, like it's just...
Yeah, they're just the trade embargo is...
Exactly, yeah, it's just big figures.
Charles, thanks, guys.
But one thing that really caught my eye yesterday, Boise, Stone Island at the football. Unfortunately not. I was up in Petoji Park in Aberdeen. I was there for the 3 quid pies. So it was pies that was focused there, not the Stone Island.
I'm not saying anything about you and pies.
I love a cheeky pie, mate.
Just leave some for the other people.
I'm integrating into the UK culture.
Anglo-American has had a production report. It's looking up 1% with copper and iron ore in line with guidance. We've got Balfour Beatty up 2%, Ronnie, with winning a contract in Texas.
I saw that, worth about 800 million or something, right?
That's correct. Yeah, 889 to be exact. Well done.
More than just a pretty face, mate.
We've got Ronnie's favourite Domino's Pizza, Q1 like-for-like sales plus 0.5%. Total orders and like-for-like remained positive in Q2. Unilever looking up 2%. So levers we've talked about up 2% there. Decent? Decent?
Yeah, I'm trying to find some Eli Lilly news to hit a jab at you. But
well, the obvious one is the stock Senior, Rich's favourite stock. That's what he is. Up 2%. Reassuring
That's
Q1
my job
update.
for me.
Yeah, thank you. And RWS. Oh, I hope nobody's in that. What's RWS?
RWS. Never heard of it, mate.
Do you want to check? Have a check what that is. Down 30% on a big profit downgrade. And then Relics inline Q1 update. And Indivior up 2% on results ahead of guidance. And finally, got a lot of results. We're really into results season here. Inchcape looking down 2% on a soft Q1. About us.
Yeah.
Oh, ASOS.
ASOS, I got them up here, mate. Just give me 1 second.
So like-for-like sales down 13%. Full year revenue outlook at the lower end of consensus looking up 2% despite that.
Yeah, and however, a positive is that the gross margin is at least 46%. So
Great gross margin, isn't it?
yeah.
Good. Right, very quick break, but before, basically our lights are being run by how many likes you give us on the YouTube. So the more thumbs up you give us on that, then I think the longer we manage to keep the cameras on.
Yes, please like and subscribe. So me suffering here with Rich is worth something at least.
Exactly. Well, the circus will be back in 2 minutes.
Hello and welcome back to the Trade Live with IG show. You're joined with me, Ronnie, and my pal, Rich here.
Oh, hur mår du? Tack. Just getting a WhatsApp from producer Fred.
Oh yeah, I hope he's coming to defend my honor.
In the break. He wishes you all well.
Oh, that's not what I expected.
Wishes everybody well and says the new producer is doing very well.
Happy to hear that. I agree.
I agree. Oh, silence.
I bought producer Fred a nice Burgundy wine as his leaving gift.
Yeah.
And the day that the tariffs were announced, when the whole market went belly up, and I think I probably had the most intense day at work ever there. Yeah, poor me. After the day when we went out, I got a message from Fred drinking the bottle of wine.
Brilliant.
And that was the highlight of my day there.
Right.
Great.
Now, I call out to the London Stock Exchange. We want you to sponsor this part of the show so we can get a new bell that actually works. So let's just pretend that we are. This opening bell is brought to you by the London Stock Exchange. Let's see what is happening in the London Open there. They're slowly opening up. HSBC giving back 1% of its gains from yesterday.
I mean, still very, very good day from them yesterday. They haven't given back all of it, so they're doing quite well. They shouldn't complain.
BP sold off yesterday. That was a little bit disappointing from my side.
Well, I think it's come out. I think the BP news is sort of fueled by the fact that Elliott are requiring sort of unrealistic free cash flow from them.
Well, unrealistic if the CEO stays. If he goes, then it's free game.
Yeah, you never know, but it's I'm not as bullish on BP as I was. I don't think that Elliott are able to sort of materialize on their goals that they have set. They're also doing advertisements on like YouTube now, talking about improving shareholder value, which is
really,
yeah.
Right, just taking a quick look at your ex-dividends there. We have the this is a great website, Dividend Data. Let's get this in for you. We see Legal and General, the 24th of April. This is the ex-dividend date you want to see here. So dividend impact, 6% you've got from owning Legal and General today. Cha-ching!
Yeah, I mean, probably compensate a bit for the beating you've been taking on the share price.
Mate, they were at £2.50. What are you talking about? This stock is up 25% in 2 weeks.
And before that?
Down a bit.
Yeah.
Right move, you've got 6 pennies coming to you today. You've got Hallian, you've got 4.5 pennies. And Spirax Group, you've got 118. Don't forget there, Glencore pays next week. So Glencore and Centrica are your dividends to watch for next week. Let's see there, that's obviously coming off Legal and General 5.8. So you're actually Legal and General net plus 0.2 on the day.
A standard dividend adjustment.
And ITV down 1.3, Hammerson down, HSBC we've said, Burberry down 0.7. Shall we have a look at Kering, Ronnie?
Let's do it. Let's see what they've got.
Are you? Oh, we're here and they're not open yet, so
okay.
Sounds like that could be a big move.
Lol, JK.
Stocks on the move higher. Tesco's, where you get your best clothes. Ronnie.
I'm actually a Sainsbury's shopper myself, so I can convert my Nectar points into Avios points.
Nice.
Yeah. But yeah, they've been doing quite well. Tesco, they were down at the sort of 300 levels almost.
320.
320, yeah. Now they're back at 360, which is always nice to see. Associate British Foods, that's where Rich buys his clothes. Primark. What else do we have?
Oh, back it up then. Is that it?
I mean, yeah. I mean, they're up 0.87. Nothing to write home about. There's no massive movers on the upside today.
Is there?
Anything that caught our eye?
Unilever, there we go. So down 1%. We had heard them up pre-market. So little bit disappointing there from levers.
Maybe the stock buyback hasn't taken the full effect that we wanted. It's only 1.5 billion.
Now talking about buybacks, where is it? Where is it that JP Morgan impacted stock yesterday? It had it did sell off further during the day.
Oh, your old favorite there, Canal Plus at 170.
That had a great day yesterday.
Oh yeah, I can see that.
Really strong. The ISA had a really nice day yesterday actually. But we can't see Vodafone because Vodafone must be blue on the day. Where is it? There it is. There it is. Not as blue as I'd like it to be.
Yeah. Get used to it, mate. Speaking of...
Right, Kering is open, I'm hearing. So let's scoosh across to Europe there, across the channel, into France, into Paris. It is down 5%. Ooh. What's 18 billion minus 5%, Ronnie?
That is...
17 billion.
Is it actually?
Yeah.
Yeah, close enough, mate.
So Kering now only worth 17 billion euros. Where is the bottom in that?
I don't see the bottom, mate. If I'm being honest, I don't see it.
We had away from the numbers asking what do we think of the options market? Is there an options trade in Kering, Gucci, for when the new creative director launches his thing? You're guaranteed to get some positive Parisian marketing, aren't you?
Yeah, the 17.1 billion that it's now worth might take even a bigger hit.
Only down 3.3 now. It's just had a 1.5% rally in your face.
What's 3.37% of 18 billion, Rich? Quick!
600 million.
Yeah.
Why did you stop me buying it? Down 2.8. Ronnie. Right, French banks doing all right as well. Down 2%. BNP Paribas, not great on the back of numbers there.
Yeah.
They said tariff impacts were going to be hard to predict.
Net income came in very slightly below estimates.
Yeah.
2.95 billion. Estimates was 2.97. Not ideal. How's Nestle doing today? Because they've had quite some rough time, but they beat revenue growth 2.8% versus 2.58.
Down 50 basis points.
Are you a fan of massive conglomerates like Nestle? Is that something?
Are you running into the fact that Luke Moore was the Milky Bar kid?
Was he?
When he was a child, yeah. Did you not know that?
Genuinely.
I thought everybody in the desk knew that.
Oh, look at this kid, man. The diversity on him. From Milky Bar kid to Hollister teenager.
That's it.
He can do everything.
The boy was a star.
And they asked me why I idolize him. Oh, mate.
So Luke Moore out at the Arsenal game last night.
Yeah, he was there.
He met some. So one of our clients was apparently.
I got some messages in the WhatsApp chat.
Did a school sports back in the day. Hand timed.
I got some messages in the team WhatsApp chat. Apparently, our client was quite proudly beating Rich's time in track and field.
Please.
Or whatever it is he was doing, running away from his problems. What?
Adidas up 1.8%. Talking about athletics. Talking about the superstars of Europe. Adidas,
1.71. I would expect it a bit more after the positive results that they had. Rich, what are we doing on Adidas? Come on here. I know you're itching.
My problem is that it's all based upon Samba and Gazelle, right? Those are done. If you were going to buy Sambas, you've done it by now.
Yeah.
Right? Or you're at the very end of the chain. Right?
Yeah.
Like Pete Ward is now buying Sambas. That's
my flatmate actually just bought a pair, size 51 European size. He's got boats.
Is he a basketball player, is he?
No, it's just, yeah.
What I'm more interested in now is JD Sports. Andrew McKelvey, I am taking your idea. I like that a lot. So let's see where JD Sports is on the back of these results. I'll look at that big blue number next to that Vodafone share price.
Before we go into JD Sports, let me just tell you about a telecom company that people actually care about.
Yeah.
BT. They've agreed to sell their Italian business to a local provider named Retelit, as the CEO decides to refocus on UK.
Which business, sorry? Which?
Italian
business.
Italian.
But great foresight from a CEO to sell their Italian business in telecoms.
Never heard of anyone else doing that.
Right, so British Telecom didn't even know they had a business in Italy.
Nor did I, to be honest.
I can't imagine it's that big. We've seen the defensives come back today, right? This is the big comeback of SSE up 1.6, of Reckitt's up 1.4, Severn Trent, National Grid. So these algorithms are still playing in baskets, right? It's just risk on, risk off, risk on, risk off. You don't know that movie.
Karate Kid, we know it, mate. Get with it.
Yes. Oh, Mr. Miyagi.
Yes, Sensei. Speaking of defensive stocks, the sort of miners and all of these sort of companies, they've been doing quite well these past few days. I mean, mixed results, but they've been up quite strongly. Mm-hmm. And We always talk about the sort of buy the picks and shovels of an industry rather than buying the gold. And well, you should probably bought gold these past few months, anyhow. But a company that is worth looking for, if you're looking for the picks and shovels of the defensives, of the miners, is, sorry to plug the Swedish companies again, but Sandvik.
Yeah.
Sandvik, who do the machinery that is used in mining extraction. They've actually just been downgraded, matter of fact. They were downgraded yesterday, but the market doesn't care because the market wants the picks and shovels.
The market doesn't care. The market doesn't care.
Zoom in on the chart a bit. I mean, go there. Yeah, there we go. No need to see all of that.
Do you prefer Sandvik or Atlas Copco?
Both of them.
Right.
Both of them are two good sort of picks and shovels exposures to mining equipment and machinery.
Yeah, the more it's we're not talking Caterpillar here. We're talking about the actual sort of tools and the precision.
Exactly.
That the Swedish are so good at.
Exactly.
Handling small things. So Sandvik here, you see, had a little bit of a sell-off recently from 230 down as low as 170. And now back at the 200 level.
Yeah, this is one that's, you know, a defensive long-term hold. If you're looking to gain sort of exposure to the mining industry without having the direct exposure and being as dependent on the mining performance, this is a company to look at.
Mm-hmm. Yeah. So
obviously do your own research.
Let's have a look at Atlas and just seeing if that has done better, because oh my goodness.
I think there was a split there.
Stock split, yeah, it must be. Let's take a look at a little bit closer up then. In the last few years, yeah, they've also gone nowhere. That's interesting, considering the commodity, you know, the kind of commodity cycle we've been through. Atlas Copco, Sandvik from 150 up to 200, 200 back down to 150. I think you could be right. I think if you don't think the China story is done, then you've got something interesting there. I'm going to look more into that. What else we're going to look more into is the fast markets of the technicals at the moment. We've got the one, the only, the upgrade, Axel Rudolph. Forget your BBC at 5:30 in the morning, Chris Beecham. We've got Axel. This is where you want to find out the technical analysis. We've got him live in 2 minutes coming up. Ronaldo, thank you so much for joining me this morning.
Thank you for having me, Rich. Always a pleasure.
You've brightened up my day as ever.
Oh, likewise, mate.
When are you back on next week?
We'll see. I mean, I tend to get a text message from you every now and then, so most likely I'll be back.
Begging message.
Yes, but it's always very mutual. Me begging you, you begging me, you know. Begging what? Thank you very much for having me on today, Rich. You guys are now upgrading to Axel. Thank you very much and see you later.
I wish the lights had gone off. Right, welcome to Fast Markets and Axel Rudolph's first ever appearance on Fast Markets. Welcome, Axel.
Thank you very much, Rich. Glad to be here.
Now, the reason for the invite is because Trade of the Week was so successful that we've got to bring you on Fast Markets, because that was an absolute belter you had on Tuesday.
You know what's really interesting, before we talk about that trade and, the short NASDAQ trade that, I've been sort of quoted on social media for quite a while now, those are just two trades out of the trades. I'm more focused on the next 1,000 trades than on my current trade or yesterday's trade.
Yeah.
Because what's really funny is when we started off, if you remember Trade of the Week at the beginning of the year, we got 4 trades wrong in January, one after the other. And I think we were down about 6.6% or something like that. And at that time, a lot of people who followed it last year when it was up 31% thought, you know what, this doesn't work. Even though I said, last year we had 2 occasions where we had 4 or 5 trades in a row which went wrong. And here we are, a few months later, and we're up again. Those losses are made back. Everything's fine. But you need to be aware that you can get these series, even if you're the best analyst or trader in the world, of getting those trades wrong, and you can have 4, 5, 6, 7 in a row wrong. This just happens,
and that's where the discipline
why we risk 2%. Sorry,
and that's where the discipline comes in. It's so important to get your sizing right and your stops, and that's what leads you to get through these tough times of 4 or 5 trades going wrong, because then you come in, with one like on Tuesday. So just run everybody through what you pulled off on the DAX on Tuesday.
Well, I didn't pull anything off. I mean, what I usually do, I look at the charts. So basically, what did the charts tell us all? And you could have done the same analysis, and you probably did. We could see here that on the German DAX 40 daily financial bed, you had this downtrend line. So we had 3 touching points. You can see here perfect touching points. And then on Tuesday, what we had was this break through the downtrend line, and also we were just about testing that previous high. So the odds are pretty high, and to be honest, I looked at the intraday charts as well, and I already had a setup on the intraday chart. So mine was actually quite a bit lower than the entry point we got, because as I always say, you can't come up with a trade idea at 10 a.m. or 9:30 a.m. every Monday. It could happen at 6:30 a.m. It could happen at 4 p.m. Who knows?
Yeah.
But anyway, the setup was there. We got the break of the trend line, and the odds were that if we were to break through that downtrend line and then close above the previous reaction high, which was going back to Thursday of the previous week, it was extremely likely that we would go and retest at least these highs from the 9th of April, but probably also a bit higher. And that's exactly what happened. We just shot up, obviously helped by Donald Trump backpedaling a bit.
Yeah, certainly.
But we didn't know that. But it doesn't really matter. If you look at the charts, all you're looking at is probabilities. And sometimes you get them wrong, sometimes you get them right. What is important, as you said before, is what size you risk and where you place your stop losses in case things go wrong. And this time it worked out fine.
Great. And is there anything that's you've noticed in charts at the moment that you're keeping an eye on, you're interested in, maybe is just some early warning flags?
Volatility. So basically, yesterday, for example, it wasn't that volatile, relatively speaking, that volatile on the DAX, for example, as you know, I traded. And then suddenly we got that sort of news out that perhaps the US will now start to lower tariffs on China. Suddenly the DAX shot up 250 points, then it was down 200, then it was up 100, down 100 within minutes. So when that happens, I just stay away. So when the volatility becomes crazy, I know a lot of people want to then really, really size up, and make big profits. But because it's so volatile, it's much more stressful to trade. You might get false signals. And also what might happen is that you can lose a lot of money very, very rapidly. So for me, those times are not times to trade. Those are the times, if I do have longer term positions on, where I will reduce my size and not increase it. So that's the only thing I would say. We are in this time period now where suddenly we can have these big surprises and the market could just move crazy distances. So if you have positions on, and I believe we still have at IG free guaranteed stop losses until the end of the month.
That's right.
I would urge you to use them, especially if they're free, because that way, if you get a 200-point move, and for example, you had your stop in, you might get, a really bad slippage on that trade. You might lose 50, 60 points.
Yeah.
If it's guaranteed, you get out exactly what you think you wanted to get out at.
Great. Can we have a look at what would you rather first, S&P or FTSE?
Let's just do the S&P.
Okay.
S&P is really interesting as well because we hit that same resistance as we did on the DAX. On the DAX, we managed to go above it because, as you know, a lot of investors are switching out of US equities into still relatively cheaper European equities, and the preferred market is the German stock market. So that's why the DAX is outperforming still. But you can see here the S&P rallied and basically retested its high from the 14th of April. Didn't even manage to reach the previous 9th of April high. So here we are relatively speaking weaker, as we can see. So we've got this huge resistance area, and also, and for me, technically, this is really important, we've got the low from March, which comes in at, on this daily financial bed, 5,503. So that whole cluster of that low with this low here from the 31st of March, these previous highs here in April, and the downtrend line, which in this case hasn't been broken through, all represent a lot of resistance. And I wouldn't be surprised if in the next few days we might perhaps have a retest or not even have a retest and fail here and maybe come down again. So for me, what I perceive to be a downtrend at the moment, in my opinion, isn't over yet. And it will only be over if we manage to rise with regards to the S&P above the 25th of March high. So that's quite a way higher, around 5,790 points.
Oh, wow, yeah.
The index itself. So that for me would indicate, okay, that's just a big ABC Elliott wave correction, and now we're going to go up. But unless that happens, this major resistance area is more likely to cap than not, and we could have another descent towards last week's low, and if we go through there towards the low we saw in April so far.
Okay, so 5503 is the first important level, and then 5,790-ish?
Yes, it's basically the high from the 25th of March. If we go above there, then that's just been a correction here, this whole phase since basically early March. And the worst is over and we're going to go back up again. That would probably happen if Donald Trump were to reverse all his trade tariffs. And
yeah,
the questions are, will he?
This is what I like about this analysis, because it ties in with my fundamental work as well. As I've had up on screen, if we're talking basically at the moment, are we talking a $266 EPS, and are we putting that on 21 times earnings, or we put it on 20 times earnings? And the very maximum I can see is about 5,850, but much more likely is this area between 5,200 and 5,500. So I completely agree that we're in that, what's going to be that way, yeah, that way. We're in this downtrend with 5,500 as the resistance, and I'm maybe not talking about getting back down to the lows. I think more a consolidation in the 5,200, 5,300 area.
We may well see that. I mean, nobody knows. I'm just looking back to, having seen these sort of markets before in the past, and the sort of V-shaped reversals we saw in the COVID bear market, the very sharp move down and very quick sharp move up, are rarer than a retest of the low, quite often making a new low and then reversing, or even sometimes making, as we saw in 2008, for example, a third low and then turning. The problem is, if we drop from here back to the low, we're talking another 10%, aren't we, easily? So don't forget, in 2000, 2003, we saw some markets go down over 50%. So NASDAQ went down 89%. So we all think, oh, that's in the past, it can't happen, not with AI, etc. I'm not saying it is going to happen. All I'm saying is what we've seen so far could just be a correction in the bull market. Fine. In that case, it's done. Or it could be something a bit more nasty, and we could enter bear market because we're heading into recession territory globally, and that could last a bit longer and be a bit more painful. Yeah,
and again, to marry it up with the fundamentals, what we're saying is, are we going into a recession or not? And you've got 3 to 4 months of slower economic data, increasing job losses, maybe concerning inflation prints, no action from the Fed, indicated by Powell, depending on whether he takes his little elbow from the president or not. So companies aren't going to be able to come out with the guidance that they did in Q4. So it kind of all marries up. Everything marries up quite nicely for these people that are buy the dip. Just we got up to 5,450 yesterday, and it didn't last long. And if the resistance is at 5,500 and the news that is going to be coming out over the next few months isn't particularly positive, then I'm not sure even tariffs going down to only 60% rather than 120% necessarily put us into the bull market. What is in the bull market, of course, is gold, Axel.
It is. We can have a look at gold, and gold did come off the last 3 days, but it came off from where? I mean, come on. It's gone up to basically $3,500 per troy ounce, all-time record. And yes, we see a correction because obviously at the moment, because of that de-escalation and the potential de-escalation, we should call it in the trade war, at least rhetorically, it is a de-escalation already. We see some profit taking, but that's totally normal. And what we also see is the US dollar basically bouncing off its 3-year low. Mm-hmm. That means that for investors outside of the US, the gold bullion becomes more expensive, and therefore that's also conducive to the gold price coming off a bit. But let's look at the trend, because as you know, I love looking at trends. This trend to me is still very healthy. I mean, even if we were to take out yesterday's low, I mean, we might see a sort of ABC correction, whatever. Where's the next support? Well, we've got this low going back to the 14th of April. That's 3,194. And then we've got the high going back to the 3rd of April. So I always look at clusters of previous lows and previous highs. That's at 3,168. So in that area, we've got pretty good support. Basically, as long as we stay above there, for me, the medium-term uptrend is still bullish. That's just a short-term move down. Yes, given the bearish engulfing pattern we saw on Tuesday, where you had this body engulf the previous bullish body, we could see a consolidation phase now, and it's unlikely that it would take out the high anytime soon. By that, I mean in the next week or so. Okay. But the trend is your friend. It's still pointing higher with regards to gold.
And what happens during that period of consolidation? Because remembering that we trade options as well, right? So what I'm hearing there is the potential to sell a put at 3,150, take that premium, but perhaps the upside is capped as well. So, selling a short-term call at the highs might be a way to take premium in on both sides.
Definitely. I mean, if you've got the time decay in your favor, selling options makes sense. And it is pretty unlikely from a probability point of view that in the next 4 or 5 days, we'll take out that previous high at 3,500. So you could definitely do that. Longer term, I have still, but I don't know what the timing of that is going to be, an upside target, a Fibonacci extension, which comes in at $3,755 per troy ounce. So that's, and it has been my long-term target for over a year now. That's a long-term upside target. But short-term, it does look a bit toppish here, to be fair.
What was the upside target? Sorry, Axel.
3,755. That's okay. My main target. And there's a cluster, it goes up to 3,800. But that whole area in the future at some stage might be hit, because technically we've got some upside targets there. But we don't know when.
No, that ties in with, everything as well, the kind of the noise of a continued budget deficit, continued, how do you say, from the government side, ill discipline, let's call it, in management of the debt. And I'd just be interested to see what effect it has on Bitcoin. And we've had the gold move. I just wonder if we get some flow out of gold and into, you know, our digital gold friend at some stage as well. Axel, that's been absolutely wonderful. Thank you as always. We look forward to Trade of the Week on Monday, you know, after such an incredible result. No pressure at all next week.
Thanks, Rich. See you.
Thanks
Bye.
for joining us.
Thanks for having me.
Hey, welcome to Live from the Trade Desk with myself and Jack. How are you?
I'm good, Ange. How are you?
I'm very good indeed. We were just talking about ribbing here. Some people in the chat asking about pegging.
I can't believe that's come up.
Oh my goodness me, where are we going? Thank you very much for Rich and Axel talking about like levels and fundamentals, because I was out there, you know, taking a look at the NASDAQ and specifically Kering as well. But just showing you stuff that we have to deal with here. Don't know if you can put up my picture there, Phil, but this is a picture of what Phil has every morning. And look at that. Look.
What is it? I can't even make out what it is.
Those of you who can guess what this monstrosity, actually it's very healthy. It is very healthy, but it does look a bit like frog spawn. And I look to my left and I see this, and I look to my right and I see Rich brushing his teeth next to me. So it's really good having you in, Jack. Send me the answers on the chat, and there is a prize, an IG cricket bat could be yours if you can tell me what Phil. You can ask him later on as well when producer Phil comes on for the live Q&A. What do you have for breakfast?
Nothing today, but generally we've got cereal out there. There's a cinnamon one. I still don't know the name of it. I think it might be Seriously Cinnamon. and someone put me onto it, and I'm now a complete addict. Have it every single day. I love it.
Whoa.
But it's probably the sugariest one
The
of
sweetest.
the lot. Yeah.
You'll be 3 times your size.
And my
this
teeth
time next
falling
year.
out.
Teeth falling out. Great. Look, let's have a look at the indices really quickly. Just a reminder to our trader friends where we have come so far this morning. US Tech 100 down 0.5% there. Those of you that went long yesterday, but I said be careful, because this is a market that can turn on a sixpence. It is now down again. Wall Street also heading lower. US 500 down 1/3% as well. And across the UK and Germany, we're seeing red arrows too, but FTSE now break even. What's volatility showing us for the rest of this week?
It's still very similar towards the start of the week. It's been quite erratic at times. I think yesterday we had that period where quite a few news stories broke around the same time, just around the open probably, and vol spiked up quite a lot, but it's returned back down. You mentioned Europe there. I was noticing this morning, it seems that the longer terms, so the monthly side of things for Europe, it's started to calm down quite a lot. You can't speak for the short terms because they have high vol inherently with time decay. But those shorter terms, the longer terms, have started to come back to where we normally see them. Similar story for the US, but we have a lot more shorter terms to see there, so you can see when that vol is starting to die off. As it goes for S&P, we're probably at a new normal now. We were speaking about this morning. It seems...
Let's take a look.
Yeah, let's have a look.
So
if you see the daily on there, actually.
Yeah. So here we are. There's a look at the daily.
So we're at around 43% there. It's probably fairly similar to where we were yesterday around this time. I think we're generally going to stay around this level. I think with a quiet day, not much on, you probably expect 25% around there or thereabouts. With this whole Trump period, and I probably expect this to go on for a lot of the start of the presidency at a minimum. I think we're at a new normal for short-term vol.
Exactly. Are we now, I mean, I know that we are in earnings season. I know that we are, we've got quite a few data points this week yet, but are we now in a point where this is the new normal? This figure is a new normal? Because, prior to the Trump tantrum and the, progressive tweeting, shall we call it, continuous tweeting, when we see weeks like this, it normally isn't as high as 43, 44, is it?
Not really. And it's mostly stemming from announcements and tariff fears predominantly.
Yeah.
And until we see an end to this and stability, we're not going to go back to those low 20s. And when I say this, I'm always skeptical of saying a new normal, because then next week there's another normal that becomes or takes over. But I think on average we've been seeing vol around this level on the short terms. Until Trump either calls off the tariffs completely. Every news story seems to be coming with a pinch of salt, so no one has the certainty that they want. The volatility stays higher. I think that's going to continue. Yeah,
and it can turn in a minute, as we've seen. Let's take a further look out here, checking in on, let's go to weekly, shall we? Which one would you like, 28th or 30th? 28th?
We'll go with the 30th, so midway through next week.
There we are. Here we are.
So that's come down quite a bit there.
Yeah.
28%, still probably higher than we'd expect, but you can see we're not fighting that time decay anymore. Starts to smooth out a bit, and I'd say best guess at where the front month is right now is probably 25, 26. It's going to smooth out as you go along that curve naturally, but it's still quite high relative to where we would have been, say, a year ago. It's just, the uncertainty's taken over, and that baseline vol seems to be at a higher level now.
Can I be cheeky, and can we look out to 2 weeks from now? There is a reason for this. So that would take us to the 8th of May. So if I want to look at vol there...
8th of May, if you're looking S&P, you're probably best on the May contract.
Yeah,
That'll
so
capture it.
30th, yeah. So the reason...
Sorry, the one below.
Oh, the one
is
below,
the
yeah.
16th.
Okay. Yeah, could you tell us why it blips like that sometimes? I've noticed that we get like a...
They're in the different categories. So the 30th of May is the end of month contract for May.
Gotcha. Right, so here, let's talk us through that. So it is, you know, especially that you mentioned the time decay, it's further away. So we are seeing a calming down there as well. 26. Is this what you would normally expect to see, or is it still slightly elevated?
Probably slightly elevated, but yeah, it's higher than you would expect in the quiet periods or a week without much going on.
Yeah.
We'd probably expect it to be lower than that. It seems to be stuck around this level now, and then spikes up as and when news comes out or tweets are sent.
Yeah.
It just seems like that's persistent at the moment, and even after the 2-week period where we calmed down in terms of volatility,
Yeah.
it doesn't seem like we've returned back to that thing. We're now at this base level.
So there is a good reason why, Jack and trader friends, we are looking at this point in time, because there are starting to be mood music surrounding the chats that Trump has had with lots of CEOs, including the Walmarts, the Costcos, and also car makers, that he's having, you know, all these backdoor chats to find out how they are reacting, how they feel about these tariffs, right? Which will obviously impact and hurt their bottom line. So the reason I'm asking for this particular period, trader friends, is because they're starting to be mood music. If you search hard enough, you will see that many of the CEOs, especially the retailers, are saying that it's going to be around that week or in a few weeks and the weeks after this when we will start seeing those price pressures being passed on, because they can't hold on any longer.
Yeah.
At some point, it's going to start showing up on the price tags, right? So a key one to watch. Also, some of the earnings season, I think, would have washed out by then, and so we get less noise.
Yeah. Are you expecting next earnings season to be where we start to see impacts from this?
Yeah,
Yeah.
totally. And I think that we can't really get away from this. If you're a CEO, you're probably having kittens the moment Trump came in, because you'd have no idea. I mean, never mind planning for a whole year, for an annual, like most CEOs do. This is kind of like, let's plan for maybe 2 weeks' time, right? Or how are we gonna maneuver? There have been a long list of companies that have said how they'll maneuver as well. I'm sure you've seen some of the names, but trader friends, feel free to chime in. Guess how many companies have said they will do something, and if you can name a few of them, that'd be great as well. So come on, have a guess. Some of the usual suspects, some of the ones that you wouldn't think of.
For me?
Yeah.
Oh. Yeah, I mean, I think I read something this morning that said 90% of them were talking about tariffs in the recent earnings, at least on Tuesday.
Is this the same article that was about?
It might be.
Those
So I'm
mentioned
guessing
recession
it was
as well.
Tesla, Verizon. I'm not sure of the other ones. Do you say retailers?
It's quite a long list actually.
Yeah.
So not just retailers, but also exporters mainly. But it is a very long list of companies that have said they are going to bring expand their domestic footprint in the US
Yeah.
to try and sidestep these tariffs.
Have any of them actually done anything yet?
That is the key.
just talk?
That is the key. Until soil has been broken, until ribbons have been cut and things start, being built, all this talk is cheap, right?
Yeah.
But some of them have already poked their head above the parapet, stating that they will either do so, or they've given a date, or they've stated an intention to. So it's very brave, because if they come out and said, we will do this, Trump is likely, and Besant and Vance are likely to kind of pounce on it, because it's another card, right, that they can use. But the usual suspects, LG Electronics, LVMH as well, considering seriously bulking up, Barry Callebaut, the chocolate maker, pretty much everyone that has anything chocolate, be it Snickers bar to your hot chocolate that we get on IG or Monkey Man. If you're having hot chocolate instead of a tea, it would have potentially some Barry Kyobu out there. They are kind of like the middle man, as it were. Honda and Hyundai Motor as well. You have been seeing a lot of volatility in oil as well.
Yeah, oil was another thing yesterday that seemed to get quite a bit of attention, or especially in terms of the volatility. It comes with OPEC announcing increases in June production. Obviously, I think we were on Tuesday, was it? And we were saying it's strange how in some of these moves, markets like oil and other commodities behave like equity markets and sell off with poor news or tariff news. It looks like this is finally a market that's working towards supply and demand. We're seeing increased production, we spike off, and you can see that slightly on the chart. There was a bit of a reversal, so the impact's not fully seen, but it's interesting to see that. And also, just from the volatility side of things, the OPEC announcement sparks up sort of the pure at-the-money volatility, but it's also massively changed the skew on some of the monthlies.
Let's have a look at the options side of things right now. If you come off my chart, I'm going to switch over to the options site. What else are you looking at this week in terms of commodities? Because gold, whilst I'm getting that up, gold has also come off.
Yeah, gold's an interesting one. We spoke about it on Tuesday as well. We still see that top side preference in terms of the skew. But gold seems to be quite erratic at the moment. I think over a long term you can start to predict it, but it's becoming as prone to shocks as a lot of the other markets. It's an interesting one to see. We're getting quite a lot of business on gold now on the option side, particularly the daily, weekly golds, so short terms again. It's masses of people, particularly on the sell side actually.
Well, Rich T Biscuit be happy about that, because yesterday he became a gold bear, and what good timing too. It's come off there, as you can see, really by quite a bit. This is the daily chart there, and we are starting to see some consolidation there, and I'll be looking for a retracement, but still the longer term trend for gold is still in an upward momentum. But you were saying you see more interest from the short seller side.
Definitely. Gold's sort of increased in volatility for quite a while, especially with this rally. There's been a lot of people, or consistent business on the longer terms. Of recent times, you can see there, if you on the chart, you see probably from the start of April, which is where we have a lot of the madness, the moves start to amplify day to day. And since that point, it looks like the business on the shorter terms has picked up, basically in correlation with it.
What do you look for when you look at volumes? Do you kind of say, well, 200, when it spikes towards there tends to be more short interest? Is there a ratio?
No ratio really. I think that's you're probably spot on there. The volumes have obviously kicked up with the movement, but don't pay too much attention to it on the option side. It's interesting to see if you're looking at a chart like this on the sort of back end, but for our side, you can kind of see from just the liquidity of the options market how much volumes are coming through.
Yeah.
And particularly on those days where we get a strong move, the liquidity just drops out and it becomes quite hard to price and quite difficult to see what's actually happening, particularly if you're trying to line a skew up and the market goes, say for gold, it goes 15 points wide. There's no way you can really do a line of best fit through that. So it becomes quite difficult in busy periods.
You always know when Jack is super busy and there's high volatility. When you see let's bring me back on camera so I get the oil option chart here. When you see a growing pile of Time Magazine and National Geographic on his desk, which is growing at the moment, I noticed.
I won't take credit for all of those.
Whose are they? Why are they?
France has basically a library on our desk.
I see.
Yeah.
I thought it was a forward indicator of incoming volatility.
No.
So I kind of like, it's growing. Right, here is where you find your oil options. Let's hit that up for you. Right, so this is oil, US crude. Which one would you like first?
Maybe if you just look at weekly versus the June. So that's the weekly for tomorrow, so we can look at that.
So let's look at this first?
Yep.
Okay, here we are.
So there, jumped up to 40%. Where I'm looking, or where I was mentioning about the skew, if you look just on the downside versus the top side, the downside skew is getting very strong now. That's been mirrored through all of the expiries. So it looks like, in line with what OPEC is saying, we're looking at a movement towards the downside, or at least the options market is predicting more likelihood of a movement towards the downside. And that top side bias has inverse there, so it only sort of amplifies that downside preference at the moment. And through the monthly contract, so if you went onto the June, you'll probably see a similar story. So yeah, as we go further down in strike, so higher on the screen, that IV increases, and it's gone quite the inverse on the top side. And the only reason I mention this is what we would expect of the skew on oil, or we have expected on the skew on oil for at least the past couple of weeks. But with the news yesterday, it's only gone to strengthen that skew. So more skew to the downside, and actually taking volatility out of that top side.
And this is amid the OPEC plus output rise as well. And it feels like, looking at the skew, the tariff tantrum, the tariff signals, is putting more of an impact on the options market and markets than the traditional supply and demand side of things.
Yeah.
Is that the educated view right now? Because
I think for basically all of these markets that we offer, Trump is the conductor, or the what's the word? I can't think now. Puppet master.
yeah. When you say conductor, it's like, that's a bit mild.
Yeah.
That's a bit mildly. Yeah.
I think, paying attention to what he says at the moment is kind of more important than your traditional OPEX. I think it's going to drive the trend.
Yeah.
It's very interesting. But yeah, Trump's obviously a big supporter of increasing oil supply.
Thanks, Terence. Just a quick call out. Terence there saying we are going to obviously talk a load more macro and longer term investment with Martin Harris from our IG Smart Portfolios, who's coming on after this. And also, don't forget, lots of answers coming in, talking about smoothing out, looking out in the options side of things. We have some very quirky comments on what does producer Phil eat for breakfast. You can ask him there like Q&A, but no cheating. You have to put your answers here if you want that. Collectors, IG cricket bat from And. So you need to put that in. We have already had someone, was it Monkey Man? I can't see it. It's at the top saying steak and chips. Steak and eggs or something, or I can't remember, it's up there somewhere. Someone else said chia seed pudding. Someone else, any more? So far everyone's wrong, says producer Phil.
I think if that was a steak and chips given to me in a restaurant, I would be giving it back straight away.
I would be eating it, going, bring it on. I need a lot of protein. And Eric Jones there coming in saying, I'm just waiting for another but today tweet from Trump. Exactly. It keeps, changing. Yeah. This person blows hot and cold.
I don't know if it's part of his tactic, the never be able to guess where you're going. It's constant. Yeah. Besant says one thing, Trump says another thing, White House press secretary will then go down one route. It's just all over the place. Basically.
So in the media, just giving you guys a handy tip there, it's called flooding.
Flooding.
So there's so everyone floods the media with all sorts of signals. So then you get what you want underneath.
Right. Okay.
Yeah. Eric Jones saying bye today. And on that note, stay there because we have Martin Harris coming up next with the longer term investment view. Thank you so much.
Thanks for having
being
us.
with us, Jack, and coming into the studio. So it's nice to.
You broke me down over a long period.
I was going to start taking your Time magazine on the table to get you in here. All right, we'll see you guys after this. Hey, welcome back to the show. We've got Martin Harris here with us to talk about the longer term, but we have all sessions first, of course, which is in about a minute's time. Speaking of which, how has your break been? Did you have a good time?
Needed a bit of a mental reset after the last few weeks that we've had.
Yeah, I think Ronnie's lost weight. Rich has lost weight.
Ronnie's looking lean.
He is looking lean. But Rich grew hair and got or tan. That's probably Valencia.
Yeah.
Pete Ward still trying to get his I think his weight down. He shared this aim with everyone on the show. I keep remembering him about it. Now it's up and running. We've got all sessions going here. Let's have a quick look at the early movers. So up on the board there. Let's have a look at the, first of all, the losers, because it's looking like risk off today. IBM down more than 7%. JD.com down more than 4%. We're also seeing some of the names related to crypto also down there. Mara down 2%. Riot also down more than 2%. Palantir getting hit as well, down 1.3%. Any names there that you are particularly watching, Martin?
Yeah, so Angelina, I think we've got Alphabet reporting results later today. Apple reporting 1st of May. We've got Meta reporting end of this month, and Microsoft also, I think that's the 30th of April. So Alphabet is the big one to look at today. We'll only obviously get those results, I think, after the close, so we'll get them tonight. But that's going to really set the tone for kind of how Q1 is looking. And I think that we partly expect, Q1 results to be, in line with expectations. And really, it's all about the read through to what they now say they expect for Q2, Q3, and so on. So that's what we're looking out for.
Also, the interesting thing here is, how much pain are they going to unveil, and are they going to quantify how much the tariffs are impacting them? Lots of our viewers, trader friends, asking about chips recently, and talked about ETFs as well that you can look at, because I think the chip makers will be at the forefront of this pain, talking about this at a point where we are eyeing all the chip makers, including the those that make the gears as well, like ASML, holding also down there, and of course you mentioned the Mag 7, many of these very dependent on chips. Do you think that the chip makers are going to have a rather more difficult time?
I think, there's still so much uncertainty around not just sourcing of materials and rare earth minerals, things like that, which are potentially going to be a problem, but it's also where they're allowed to sell their chips. So there's been a lot of workarounds from NVIDIA, and I think the White House in particular are quite keen to get further restrictions on the likes of NVIDIA and other chip producers to try and really restrict where they're able to sell and the level of compute that they're able to sell into China. So that's something that we're still working out. Somehow, there's still been H100s getting into China, so we need to try and get an idea of what the future sales might look like, what the order book there looks like.
We'll get to more of that in a second. Let's just check on the other side of the equation there. For the oil sessions, we're seeing Tilray there up 4.47%. Lumen as well up on the winners board. Not many, it has to be said, compared to the losers board, but we are seeing HP able to hold on to positive territory. Barrick Gold also up 1.2% in a time when we've seen a correction, a slight correction, it has to be said, in that still uptrend gold, coming back to around that 3,000. Let's have a look at gold here whilst we're at it, because that recently can be quite volatile. Oh yeah, spot gold. Having a look at that for you. Spot gold still at that 3,331 mark, let's call it, and it was down earlier, but now we are looking at a consolidation. Dollar is still soft as well, and that could be the reason why we're seeing gold now trying to consolidate at that level, recovering a bit, or rather stabilizing after the 2-day slide. Copper futures also, we're looking at that after mixed Asian risk appetite. Speaking of China, you mentioned China, Martin. I just had Jack on. I was saying that I'm looking at potentially the next 2 weeks as a very key point, because many CEOs apparently have told Trump that these tariffs are going to start hitting the price tags quite soon in that time.
Yeah, so I mean, there's two parts of this. So there's the American side of this, and I mean, yesterday they rolled out Scott Bessent, and he gave the very reassuring line: "America first does not mean America alone." So they're trying to get their allies back on side, and I think that the initial reaction to the tariffs was just so deep that it's unlikely that we're not going to see some kind of event-driven recession in the short term come out of this. In terms of China, so yeah, it was reported that Donald Trump met with the CEOs from Walmart. Where did I have it? It was a Walmart with the key ones. Was it Costco?
Yeah.
And who was the
Target.
third one?
Target
and
as well.
Target. Right. And so Walmart in that case are, I think, only about 30% of their sort of sales are from products produced in China, still a large number. Whereas Target are far more exposed. So any of the producers that have a better mix of sort of groceries to goods will typically have lower exposure to tariffs, and anyone who's focusing more on apparel and electronics then has larger exposure to tariffs. I think but this doesn't just affect USA. I think what I'm seeing now, factories inside China have begun slowing production, furloughing some workers. This is the headline from the FT, furloughing some workers as trade war unleashed by US President Donald Trump dries up orders for products ranging from jeans to home appliances. So this is now early days, but it's starting to be felt in China as well. And this is where, where the struggle might begin is we've already seen the US backing off initially without any negotiations taking place. So we might start to see some pain now being felt by Chinese manufacturing due to these tariffs. On side of that, China, that's the view on, if you look at a stock like Apple, really most exposed to that. One of the things is that Apple really benefited from Chinese subsidies on smartphones. So there were subsidies that went into effect on the 20th of January 2025, earlier this year. 15% discount on smartphones priced below 6,000 renminbi. So the idea there is that if China starts to also not just put restrictions on or not just the tariffs for exporting iPhones, but also basically stop demanding iPhones in that market, really going to weigh down on Apple. So Apple, obviously we saw prices falling in the last 2 weeks, but still, that we don't necessarily have an attractive valuation that could drive.
Hold that thought. Hold
recovery.
that thought, Martin. Just highlighting something that away from the numbers, very cleverly pointed out for all of us trader friends here. IBM now seeing its shares really move lower there. Just taking a look, because you can obviously take a position on this on the all sessions here at IG. This is due to the 15 contracts that it says has been impacted by the Doge cost cuts. So its shares are reacting to that. For those of you that are tuning in right now, wondering what is that reaction all about, and that spike here in the volume, that is because IBM saying its government contracts have been shelved. This is due to that cost-cutting drive by Musk and Trump and co, which really has poured cold water on the big revenue forecast, or rather positive revenue forecast that it had recently. Terence, how much time we got? 5 minutes. So away from numbers, just giving you some added, it's all about added value here. My brother used to work for IBM. He doesn't work for them anymore. He works for Petronas now. But IBM has come away from a really tough structural time as well. And just when it thought that it was getting, I'm just zooming out on my chart for you to show you what I mean. See that period there that I'm now circling, that 2024 mark? That was quite a crucial period of structural change for them as they try to pivot rather quickly. The other point of huge structural change, if you look further back when its shares were really flatlining around that COVID period, that is also because they were looking to change gear to more software AI orientated, and therefore they had to shut down quite a few cloud related projects. So it has actually climbed a lot from there, but the recent move there from its peak, as you can see, once it put through all those structural changes, that move furthest to the right, where the price action, the most recent price action is due to those cuts to government contracts. Right, Martin, are we going to see more of these cuts coming through? And do you have a guess as to what producer Phil eats in the morning? There is a collector's IG cricket bat that is a prize. Monkey Man said, I think he said oat. Someone said egg and chips.
Yeah. So I'm going with. I saw a picture of it. I'm going with a bircher muesli. I saw some chia seeds in there, so it might be a chia seed pudding.
Ars Saxena also said something earlier. Was it porridge, Arsax? Every time the chat moves lower down, loads of people with their guesses here. It then knocks out the top bit. I love the person that put steak and chips. I love steak and chips in the morning. Is it porridge? Is it porridge, Arsax? Let us know. Right. So in terms of China, what do you think is happening here, Martin? Because in my humble view, China's just sitting pretty and waiting, because we had Crane shares on, and they, as they said, which I agree with, who pays for these tariffs first? The key word is first.
Yeah. Obviously, the end consumer is going to pay. There's so much to this. Who pays for it first? We obviously remember that the end consumer is not paying a tariff on the end retail price. They're paying it on the cost to bring it into the country.
Yeah.
I think, though, that...
And they haven't felt it just yet.
They haven't felt it just yet. The delays that we've seen. There was also expectations of tariffs coming in. So a lot of goods were almost inventory was built just before the tariffs were applied. So when that inventory declines is really when we're going to start to see prices being affected. I think that if you look at something like the manufacturing strategy now for a company like Apple, they simply cannot move manufacturing over to any other country fast enough to avoid the kind of tariffs that Donald Trump is suggesting. They obviously have done a carve out now to say, okay, all of these particular goods are exempt, but it starts to create friction in that market, and it's the last thing that the likes of Apple need. So yeah, there's a lot to it, Angeline.
Speaking of which, I know you've got a nice chart for us, and we're going to talk around that. Whilst we are trying to get that chart up for you, can you have a look at the chat there? Arsac saying yes, thinking about that. She did say porridge. Good guess, Arsac. Away from numbers. Weetabix and fruit. Oh, only it were Weetabix. Let's have a look at Tesla. I know Monkey Man likes Tesla. And speaking of tariffs there, Tesla is still in reverse gear. And it remains to be seen how far this can still go. But I can tell you that from a technical perspective, and I agree with Jess 16 there, that fundamentals show you what the share or where it's headed, but you have technicals that give you the entry and exit points, which is very handy in tumultuous times such as this. So having a look there, you can tell very quickly by zooming out that there is a very good support level, a key support level at that 21,100 mark there where you see my cursor. And I've drawn that line as well, just to show you the current trend, because what I'm looking for is for it to potentially move further towards that key support level, or if it breaks through that trend line, right? That is a, any of you trader friends do music, that is a ritmico. What does a ritmico mean? Watch this space closely, or watch the conductor, because you could be about to change trend. David Boise saying you don't need to give Apple much of an excuse to up prices there. We don't have much time to go, but Martin, let's just have Martin's chart up quickly, because this is a really key one for all our trader friends here to look at. Here we are. And Martin, I've got your chart up.
Oh, which chart is that now?
Exhibit
Okay.
11.
So, yeah. So, the US market has really outperformed others for nearly 15 years now. So we've got its market capitalization has really outpaced the size of its economy. So we've got record high valuations relative to GDP. I took this data last week, so there's slight changes, but this phenomenon hasn't been reflected in other markets. And this is since the financial crisis. So despite, since sort of just pre-financial crisis. So we can argue that a lot of this sort of equity growth has been supported by fundamentals, concentration, market dominance, this American exceptionism, but the valuations basically implied a strong future path for earnings. And that is not compatible in the short term with recession. So what we have a concern about is that there is, this is our kind of bear case recession, is that we have an event-driven recession in the short term that may turn into a cyclical recession based on the kind of cyclical bear market that's created through this event-driven downturn. And so the quicker that the US are able to backtrack, and they have backtracked out of certain policies, as I mentioned, exempting certain electronic goods. So that saves some sectors of US markets. However, short term, it's very possible that we see a kind of reversion to the mean, similar to other markets, back towards US sort of GDP growth.
So are you saying we're likely to see the dark blue line go further towards the light blue line? Are we going to see a reversion to that?
Yes, that is a theory.
Fantastic. And on that note, we are going to have producer Phil up shortly, and we've taken note, Martin, of your guess as well. And Phil is going to choose the winner. He's going to choose the winner. So stay right with us, because Martin, you could be...
It's clearly muesli, guys, and there's some chia seeds in there.
We've got someone else saying Weetabix and fruit, away from the numbers, saying Weetabix and fruit there. Please put in your guesses. You still have time before producer Phil comes on next. Thanks so much, Martin. See you on the floor.
Thanks.
Welcome back. Welcome back to Confirm and Send. Now, who's this we've got in the chair?
Hello again.
Producer extraordinaire. Did you write your own tag for that?
I actually didn't, to be honest, but I've not changed it on purpose. It was more by design, so I thought I'll let the guys do that for me.
That's right. The top quizmaster is back in the seat. So send in your questions, and we're going to go through a bit of live Q&A, as we did a couple of Fridays ago, when we were desperate, but now back by popular demand.
No, I'm desperate.
And apart from your wife's,
remorse.
are you being on?
Yeah. She begged me not to come back. It didn't stop me.
Good morning. Right, let's crack on. Well, first of all, we've got Monkey Man. Monkey Man, what is your question there? Do we have proof that Rich ever was a runner?
Do we? Not currently physical proof, but apparently
there we go. Look at that. At the mighty Barnet Cocktail. That's right, Shaftesbury Barnet. And that's hurdle 8, I think. As you can see, touching down in the lead, just about to power through.
Did you lose this race?
To be honest, I can't remember. No idea. We're talking about 25 years ago, Phil.
Okay,
right, let's get on to the real stuff. So, question 1.
Lovely. So we're going to start from Jugger. Do you guys think the up gap in S&P 500 will be closed before the next uptrend, and will there be another uptrend in the next 2 weeks? I mean, we could generalize this question a little bit about your kind of current views on S&P.
So I think, I don't want people to get kind of bored of me going on about the matrix, but the matrix we got up. Yeah, exactly, the crickets. That matrix that we got up really cements my kind of view that we've got the Trump and Besant, especially Besant, have taken out the real downside risk, right? Because profit warnings aren't taking us back to 4,700. Okay, profit warnings will take us down a little bit, but the volatility won't spike like it did. You saw what it was like in those few days, right? It was panic.
It was fun, yeah.
Fun, yeah, that's
Fun's one way to
the man with a demo account.
Yeah, exactly.
It was a lot of fun. But that kind of volatility takes risk down, right? And you only see crashes like that over a 3-day period when risk is on, when people's positions are really exposed, and you haven't taken care to hedge yourself or to be prepared for that third day, right? It wasn't the first day, it wasn't the second day, it was that third day, the Sunday night into the Monday, when people got really hurt, including myself. So S&P 500, that we touched 4790, about the same time as my 400 meter PB, and then back above 5,000. So I see us trade between 5,000 and 5,500.
Okay. Lovely.
The up gap. Do you mean the up gap of the last few days? I assume that because after Besant, let rip into the private investor meeting of JP Morgan, we've seen it go from 5230 to 5,500, well, 5,450. It depends, doesn't it? I definitely see the chance we trade 5250 again, yeah.
Fair enough. Okay. Hope that answers your question. Thanks for your answer, made me think. Hopefully it did. So next question is the one and only Monkey Man. Do we think Tesla will pull back today?
Oh, today?
Today, specifically.
Yeah,
We can also generalize this week as well, the rest of it.
Yeah, let's have a look at the chart here, right? So that's maybe a little bit too long term. So you can see we're back to the level where people are happy, right? Before Trump got elected, right? We're exactly back to that point, and that's not a coincidence, because Elon he's failed to do something he clearly thought he could, and that was add another string to his bow and be part of this this government, as well as not seeing any deterioration in Tesla, as well as not seeing any deterioration in SpaceX. Now, Tesla's not the deterioration we expected. It's a reputational one. And because what he's doing is so drastic, I was talking to a couple of women from Texas last week in Valencia, and the dislike for him, even in the US, is incredible. Never even mind start talking about Germany.
Yeah.
Right? There is very, very few Germans that will even are open to the idea of ever buying a Tesla again.
Well, I read as well he was pulling back from his involvement for Doge because of his Tesla results.
And that's why it is where it is rather than at 180.
Yeah.
Right? So the stocks are meant to price in future earnings.
Sure.
Right? Not the future quarter's earnings. So if he steps back, if you've got a little bit of time and forgiveness, right? Because the products are amazing. Let's not forget that Tesla is an incredible company with incredible products, and in the future, robotics as we move into everything, right? But the valuation's absurd, absolutely absurd. So earnings need to recover, but there is still the people that have this underlying belief that, you know, that he's going to save the world.
And I also at one point did think that as well. But even I've then gone full circle as well. And I'm just a public standby in that sense, where I thought maybe he has got something there. But the more he's gone on, the more he's kind of got too involved. He's contradicted himself. You know, I don't know.
He's still selling the dream.
Yes.
And the dream is very believable.
Yeah.
So, you know, I'm no position. I always say don't touch it for the exact reason why we've dropped from, you know, 420 down to 245. It's a very tricky stock, but there is a range, and the range is 180 to 300.
Yeah, but it's one hell of a range.
I mean, you can see it in front of you how much it trades.
Okay, there we go. Right, lovely. Tesla done. Next question. Let's go to NVIDIA. This is from Away the Numbers, Neil. Just general thoughts on NVIDIA. He currently has a straddle option trade at 105. But if we take a little look at NVIDIA and do a bit more of an overview of what you've done there for Tesla, for NVIDIA.
Do you, Neil, can we just, I'm assuming you are short the straddle at 105, which makes sense. Personally, I would go 110. I think 105 is a little bit low if you're short the straddle. I think I would go more strangled. Sorry, just for everybody, straddle is when you, if we're talking about being short the straddle, when you sell the puts and calls at the same level. So your perfect situation is for the stock to trade 105 and it not really go up higher than 113 or lower than 97, right? You want it to just steady and consolidate around this 105 level. I think you're the right side of the price, right? Because it's currently trading 101, and I would be more confident about this stock going higher in the future rather than lower. I would be most comfortable with a strangle rather than a straddle. The difference being, the strangle is where you sell a put and a call at different levels. So in NVIDIA, I would sell the $90 put and I'd sell the 120 call. And I would go out to June now to take that in. But I do hold them in a longer term position in my pension, which was purchased at the 93 level.
Okay.
So I think there's real support down there.
And for my own knowledge as well, and maybe this will help other people, if you've gone got that at 90, if it goes below 90, even if it wicks below 90, doesn't close below 90, what happens then? Do you have to add more margin in that sense to keep your position going, or do you have to then manage that yourself?
So let's say it happened tomorrow.
Yeah.
Right. and I'm short the strangle 90 and 120. I've probably sold that for, I'm plucking numbers out of there, but say $6. So your break even is 84, right? Because what you're saying is I promise to buy the stock at 90 if the price dips below that.
Yeah.
Right? But you've received $6 for making that promise. So therefore it's 90 minus the $6. So you're actually buying stock at 84.
Okay.
On expiry.
Sure.
Now, if it dips down before that, yes, your vol will go up, and that short position will lose more money.
Okay. Yeah.
So you may have to put margin in, yes.
Starting to understand it. Lovely. All right. Next question is from myself, actually. So when markets are this volatile, how does your long-term view change? How do you adapt in these kind of scenarios?
Nice. Okay, I like this question.
I wrote it, hopefully.
This,
if you didn't like it, there's a problem.
This is when I go back to fundamentals, right? And I think technicals are great for a month, well, a week, a month, 3 months. But when I see markets this volatile, I pull back from having too much exposure, right? Because if you get hurt in the first move down, right? Everybody got hurt in that first move down. If you then do not reduce your risk and you get hurt on a second move down, that's kind of on you.
Yeah, fool me once.
So I reduce my risk. I run smaller positions, tighter stops, and I go back to looking at more longer term investment like pension fund, make sure my pension's in the place I want it to be. But I also go back towards earnings. So if we can just put this chart up, please. This is the 17 years of S&P earnings growth, right? Now, at the moment, we're sitting on expectations of around about $260 for 2025. But look at the 2026 number, right? The market at the moment is saying we're going to get $304 of earnings in 2026. That's when you're starting to see normalization. There's companies go back to their supply chains. They sort that out. They sort out all the problems in that Trump's giving them. Maybe they let some people go, right? So you got potential worries about unemployment. But then interest rates will start to fall. So over longer term, you start to think, oh, is that number right? Can I believe 300? Personally, I don't think you really can. I think that 300 is completely wrong. But that's what the market's pricing in. So it's then I start to think, right, well, 20 times earnings on 300 is us back at 6,000. So I know the upside at the end of 2026, so 18 months away, is 6,000.
Sure.
Right? Now that's only 10% higher than here. In 18 months, I can get 7.5% in a savings account. So the additional risk that I'm taking is for 2.5% reward if I'm going to go into the S&P 500. To me, that doesn't make sense.
Okay, yeah. And that's when you ask yourself, is it worth the additional risk?
Is it worth that additional risk? Or am I safer sitting in cash for a bit? Do I prefer the FTSE? Absolutely. Do I prefer MSCI India? Yes, absolutely. So, you start to look at your longer term. Now, I've sold my gold position.
Yeah, you mentioned, yeah.
Because I think there's opportunities elsewhere rather than in gold.
Sure.
But that was a 5-year position.
I mean, at that point, then, yeah, like you've won either way.
Well, no, because it's not about winning or losing, right? It's not down to athletics, right? Athletics is about winning that race. Investing over the long term is, right, it doesn't matter what I've had in the past, what's now going to give me that next 10 to 12 to 15% of growth.
Sure. I think it's a good way of looking at it. We have time for one more question, I'm being told. So what have we got?
Very good. That's from Dr. Watson. Dr. Watson, of course,
Can I ask
our man in the gallery along with Terence, who, it just has to be said, these guys, all of these changes that you're seeing, and almost on a daily basis, and I'll let you explain the change that's happening tomorrow. All these changes that are happening on a daily basis are thanks to Terence, to Dr. Watson, our new joiner, and to producer Phil, and Cam, who's not in today,
Yeah,
and Dom, who's not in today as well.
exactly.
But
We work hard
you
behind
guys,
the scenes.
yeah, you guys have nailed it.
I hope you're not booing me.
No, they're definitely booing Cam.
Definitely booing Cam. Yeah, and like I mentioned, I mean, the Discord definitely is coming. It's built. It's just kind of going through final approvals, so it is coming
It's with compliance.
with compliance. So we'll see how that's going. I don't think I want to answer this question. That's the thing. It's like, who am I gonna? I want to remain politically biased.
Who's your favourite guest?
Who's my favourite guest? I would do that. My favourite guest. Thing is, like, Ronnie does make me laugh. I love the dry sense of humour. You know.
My sister loves Ronnie. My mum loves Mini Cooper.
I do like Mini Cooper, but he can't ring a bell or eat sushi. So we'll leave it at that.
Right. Let's finish with what changes are coming up tomorrow.
The music, no more elevator music. It's gone.
We're talking about the music before the show.
Before the show, the stings remain the same, the bed and all that. And you can see some graphical changes that are happening on show that happen every single day. So when we do make changes, maybe something goes wrong.
You fixed the clock yesterday, didn't
Fixed the clock yesterday. We heard your complaints. Yeah, I
send in more complaints to Phil.
complain more, and maybe something will happen. That's how things get done. You know, you complain and we work on it. So yeah.
So just be ready. So make sure you tune in just before 7:30 tomorrow and you'll hear the music. I'm especially excited about the music that goes into the show. Anyway.
It's going to be good. So yeah, I think we're out of time. So yeah, thanks for having me on again. I might do it again. We'll see. Depends how the schedule goes. So yeah, thank you for having me. We have Patrick coming up soon with Angeline.
Keep going.
And yeah, we'll end the show. We'll have a good day. And the breakfast, god damn it. The breakfast, I don't get why I get so much hate for this. It's overnight oats. Oh, bad drum roll. It's overnight oats with chia seeds, cranberries, goji berries, a little bit of jam actually to sweeten it.
Looks great to me, to be honest.
It tastes amazing. I have a great time. I think technically R6 Senna won that because she said porridge. It's not really porridge, is it? I think actually Monkey Man got it. Sorry,
Yeah,
excuse
Monkey Man
me.
said chia seeds, yeah.
Monkey Man said chia seeds and oats. So yeah, Monkey Man's done it again. Porridge oats, chia seeds mixed with milk, yogurt left overnight with sultanas for sweet taste. Basically that, more or less. But I can't have milk because I have dairy problems, which I won't go into.
TMI.
TMI. So yeah, Monkey Man,
Shout out,
you won a cricket bat apparently.
shout out to your wife before we say goodbye.
Shout out to my wife, who's probably not watching. Shout out to the family if you've tuned in. You know, who knows? See you again soon. Hit it. Hit the add button. Hit it.
Hey, welcome
Hey.
to the show, Patrick Taminius. It's good to have you back. Did you have a good Easter?
I did, definitely. How about you?
Good, good. I just had some rest and relaxation, a lot of studying and doing things that I don't normally get to do, but it coincides. I don't know whether it's the same in Sweden. Here, Easter always coincides with the start of ISA season. Do you have ISAs in Sweden? It's like a wrapper for savings.
Oh, okay. No, I'm not really sure. I don't think so. We have a due date for our income declarations here coming up at the end of April. So
We have that too.
sort of, yeah. But I don't. Otherwise,
But we have
we don't
the
have the ISA.
So yeah, the next tranche basically opens up just before the Easter break. So it's good, it's good. Lots to talk about because whilst we've been away, the markets have gone wild. Were you working during that time with the when all that turmoil took place, just whacking up the US 500 there, just to have a look at all
sure.
those moves that we saw recently? Volatility has come off now, but not completely off, it has to be said, still at that 43% mark.
Yeah, and I mean daily expectations are still above the 1% in both S&P and Nasdaq 100. That I measured. I look at the daily expectation in moves every day, and we're still at like 130, 125. So it's still high.
Now, having a look at this as well, you heard Rich talking about his theory behind where the S&P should be in around a year, 18 months time, using his very helpful TikTok video. If you haven't seen it yet, please do. I have chosen that 5950 figure in that yellow line there, just to remind me of where I think it might head by year end. Paying attention to it doesn't abide by the fib rules there for now, but let's see how we progress on that. Trump and tariffs. You're still seeing that backlash against Tesla in Sweden? Give us an update.
Yeah, it's still going on. I just read about it today, actually. But it's coming a backlash against the companies who is actually enforcing the blockade against Tesla. So a lot of private persons and influencers are actually saying that, hey, it's double standard, and we're gonna have a blockade against you. So they are also facing backlash, and that could be a movement that actually takes it away. So we'll see.
Call out to Monkey Man, who likes trading Tesla there. I know you were saying that, let's have a look at some of the things that he said. One of them being that, we'll be living on Mars, or rather there'll be, a colonization of Mars, or I believe living on Mars in 4 years. I think he made that comment sometime the back end of last year. Loads of other things as well that he has said. It's really hard to know how to take this person seriously given the current status quo. But I can tell you that, Tesla shares here, this is one thing we can say for sure, still in that downward trend there, and no sign yet of it breaking that downward trend, at least not anytime soon. Do you think there might be any chance of a breakthrough or a change in trend? Patrick, given what you've seen over your side with the backlash, and also the fact that Musk has now said, I'm going to take a political step down now after earnings got whacked after he became Trump's BFF.
I mean, yeah, and Tesla follows the markets as a whole. So I think, and the market is in a downtrend, not just Tesla. So I think it will be hard for Tesla to get out of that downtrend when the market is in the same. So I just think it will just follow it down. I think they will have a really rough period going forward, even though here in Sweden, at least, the new model that was recently released has gotten a lot of good critics. And people love that, but I have a hard time to see that sales volumes will pick up substantially only on the new model. So
For those of you as well, speaking of the new model, just an update, European car sales, which rose in March. Tesla's fell 28% at that time, same time period. But also looking forward to that rapidly evolving trade and tariff political environment. We are now in a time and place where Tesla, as well as its other peers, could also potentially get hit if these tariffs don't get rolled back in some form or change in their format. Speaking of which, you've been looking at some other spaces as well, earnings in particular, Patrick. I think we're going to see real pain and hopefully some clear projections from these companies in the coming earnings period as to how the tariffs will take effect. Of course, we saw some stockpiling earlier on in the year already. What are you expecting?
Well, I'm expecting lots of earnings beats, that they will come in higher than expected. As you say, lots of stockpiling in the first quarter. Imports to the US has been in excess of export and have clearly diverged from that trend. So companies have imported in excess in the first quarter, and I think that will show. Companies has also been good at cutting costs. So I think you will see that in the margins, in the growth of earnings for this quarter, that perhaps they will beat expectations. I think the problem will be the outlook. And talking about Tesla, he really didn't comment on outlook for the year. Instead, said that we will have to get back to you on that in the second quarter. I think a lot of companies will do the same. Could be that they actually think that it's hard to predict with all the tariffs, but it could also be that predictions are really bad, especially for Tesla. So they rather keep from staying or giving the outlook for the year. So I think we'll see that a lot going forward, and that will be harder for the market to interpret and also value. So we'll see. I think a lot will happen. It will be more volatile when you have that kind of scenario.
Yeah. I'm going to put a spin on that, Patrick. I think this coming earnings season, we're going to see what I call a yes but no earnings season. So similar to IBM, whacking up IBM for you, because we had a question earlier on IBM. We talked about this. So you'll see generally good or meeting the street targets. But then, then that line comes out and basically moves the stock, like we saw with IBM. And IBM shares tanked after the company said 15 contracts are going to be shelved. These are the ones impacted by the Doge cost cuts. So I think we're going to see a lot of great earnings, meet or beat. But then, hey guys, this is coming your way, or we see that our earnings aren't going to be as good because of X, Y, and Z. Then you'll see the share react to that story. So that's my humble view.
Well, we have the same view there. I think that we'll have a beat on especially on earnings, but they will have problems guiding for a good year, and that's what they want to try to avoid. We just saw that yesterday in Volvo, that when the CEO comes out, he can actually talk the stock up, but they will have a problem with outlook for the year, and I think. As a whole, the market will probably take a hit during May because of that.
Yeah. Speaking of which, it also comes in a time when the dollar is weak. US dollar basket there, whacking that up for you. We're still seeing the dollar traversing low. It has had several sessions, 3 sessions of upticks, but really it remains mired in levels last seen around July of 2023.
Yeah, I mean, I'm not really surprised if you look at import versus export from US. I mean, imports have just skyrocketed during the first quarter here. and that is just lots of dollars out in the markets. And what happens when you have excess of dollars? Well, the dollar depreciates. So if that trends revert, so we'll see lower imports. That means less dollars, and I think the dollar index could actually regain here going forward a month or so.
Right, so let's just show the chart here so everyone can see. Moving that over, producer Phil. Earnings whispers. This is a really cool chart here. Gives you a snapshot, if it'll stop zooming in and out, of, there we go, of some of the earnings that we've already had and those coming our way. But it is going to be quite exciting next week because we've got loads of big names and a lot of the what we call mainstream. So normally you have like techs and they create a real sort of excitement. And then you got the, obviously before that we got the banks. Then you have this sort of like middle of the street, right? Names coming out. And then just when you think it's petered off, then Nvidia comes out with its earnings.
Definitely. But today, if you look at the top 5 contributors to earnings growth this quarter, you have 2 going today, actually. It's Bristol Myers, but also Gilead, if I pronounced that correctly. But so they are 2 of the biggest contributors to the earnings growth. So it will be interesting to see their earnings for today. And then, of course, we have Amazon and Broadcom, which are the top 5 also. But one interesting thing to look into the future here is that Mag 7 has been driving earnings growth, of course, and also this quarter with, I think it's around 15% growth versus 5% for the rest of S&P. But for the full year, they only have a prediction of around 16% versus 8% for the rest, and for next year, 17% versus 13%. So we will see a slower growth in the bigger mega caps, and the rest of the S&P actually gaining here or catching up a bit. If that's the AI space just taking a small pause or stepping into the next phase, we'll just see. But I think looking into the earnings from SAP in Germany yesterday, which was really great, software companies could be the next thing to look into there.
Yeah, and also maybe potentially AI, cloud computing, or the next generation of cloud and AI. I think Monkey Man sent me a really interesting company. Thanks for the website. I've had a cursory glance on my phone, and I'm going to probably get the name wrong, but it's Collabor Labs, which looks at growing chips even. Haven't quite figured out how yet, Monkey Man. Please enlighten us. Patrick, we also got quite a lot of clever comments coming in on the chat right now. Wow, Monkey Man, great memory there, talking about the fact that you haven't got a mug yet. I think Boise or Away from Numbers got the mug. R. Sachs, I will look at that for you, saying you want to add VIXIS. Is that the Vanguard Total International Stock Index ETF? Is that the one? I will have a look at that after the show. And also, Jugger saying USD Bitcoin ratio. Is that a ratio that you look at all, Patrick?
Not at the moment. Been looking at different Bitcoin ratios, but that is not something for me just at the current moment. No. Are you looking into that?
No, I'm not. But the 2 or 3 data points that I am looking at closely, and one that maybe perhaps you can give me a steer on, is the fact that we always forget, right? Everyone's looking at the tariffs, but everyone forgets as to, and I'm going to put up the indices right now just to give you an idea of where we are as we stand here at almost 10 o'clock on the markets. US Tech 100 down 1%. Wall Street also down 2/3%. And we are at on a risk-off day at the moment after seeing a bit of a rebound there. But Asia also had a slightly mixed session. Japan 225, Nikkei there down 0.5% prior to this.
I'm not really surprised about the day's market seeing 2 strong days, which is great market action. So I'm still looking into some maybe not that big moves during this week, but then we'll probably after the weekend have some good market upside before going into May.
And is this particularly because, before we get into May, we might see potentially another pullback?
Yeah, I mean, I think we're in a down market.
Yeah, and we're talking about this week as well. Earlier this week, we saw a lot of like a short squeeze, short covering, right?
Definitely. So, and a lot of people are still saying like buy the dip, and I think so. You'll have that crazy price action, but we'll have to test the bottom that we made, and I think we will retest that during May, and then we'll probably bounce up from that again.
Yeah, so taking a look at the data I was looking at, I'm still trying to find more data on this. Trader friends, if you know where to look for it, please let me know. I'm trying to figure out how much China stands to gain if it is able to sell a lot more of their products domestically, right? So whilst they're waiting and sitting pretty, China, as we know, haven't come back and said our doors remain open to the negotiation table, Mr. Trump, but feel free to come to the table. They haven't actually said what they're actually going to really retaliate on or what they're going to do. They're just waiting for Trump's next move. JD.com has already said it would launch a fund to the tune of 200 billion yuan. That's $27.3 billion, people. 27.3 billion bucks to help exporters sell their stuff at home over the next year. This is just the next year. They say that almost 3,000 firms have already made inquiries. But what is more interesting is that China's retail sales last year, guess how much it got to in terms of trillion? Just pluck a figure, any figure. Patrick.
The retail sales in China.
Yeah. Just in dollars, in trillion, just pluck a figure. Just last year. Come on, we got 10 more seconds.
300.
Well, 6 trillion. Good try. 6 trillion. And that is more than 11 times its exports to the US. More than 11 times. And on that note, if you have that data, trader friends, do email it to me or put it in the chat here. Hit the like button, hit the subscribe button, and we will see you again tomorrow. Thanks so much, Patrick.
Thank you.
We'll speak on the phone.